Good morning and Merry Christmas Eve to everybody. And calling you from normally sunny Southern California, but we've been absolutely getting rocked with rain. And I'm waiting. It looks like the last of the rain is going to spin through here. I think we have some clouds coming in, usually the back end of the front. Maybe get a thunderstorm or two, and then we're going to be able to clear out for Christmas. And I'm told the snow level is down to 3,000 feet. And I live about 3 miles from the ocean, and I live about 9 miles from a 7,000 foot peak. And so when I come up to the top of my hill as I go over to the interstate, I should be able to see a beautiful ice cream cone on the top of Saddleback Mountain, and it would be a sight to behold. I'll definitely take some pictures. But I want to talk about today is the something really interesting is in what's going on with the market. And I'm like probably a lot of us saying, oh, hey, we're gonna, might be benign next week. Market's not going to do much. And the fireworks are going to start the first week in January, when everybody's going to start selling their positions. So they have like a whole year before they have to pay their taxes, or hopefully they get a lower rate, or whatever the case may be. But the market looks like it's setting up a bull flag, and it's just amazing. I drew this line a couple days ago, actually, when I saw the top, and I just wanted to see if it would pop it, and then I had this line drawn here as where there's a gap fill, and that's also kind of like a bull bear line for me, because that would actually put us into the back into the 2-year rectangle. And so my view has been that as long as we're between these two lines, things are fairly neutral. And as some of you know, I sell credit spreads on my on SPY, and to generate income for for my family's daily needs. And I have these dots as my indicators whether or not I should be selling put spreads, I should be selling call spreads, or should I go to a more to a condor. But last week I was selling the 231, 233s for the first week in January, but I had a calendar spread on put spread. I was actually debit versus credit, because I'm just not sure if the market's just going to drop out, and I wanted to have some exposure on SPY to the short side. And then the dots here are telling me that it's been a pretty neutral. Your call spread is good, but on Friday I closed my 231, 233 at the end of the day, because I got essentially a buy signal on the SPY. And I know it was a weird day. I think it was one of the lowest volume days ever. It was also one of the tightest ranges ever, but you got to respect it, and especially with this bull flag here, showing right now. And just to diverge some more here, I just maybe want to explain my chart a little bit better. Is that this blue line here is moving VWAP, and when price is above this volume weighted average price, is that you have to assume that there's essentially is accumulation happening. And the way the traders get paid, institutional guys get paid, is that when they're buying, they want to buy as cheaply as they can, and then they want to sell as high as they can as they're entering a position. So whenever price moves out too far from the VWAP line, you're going to get some people selling in, even though they might be in accumulation mode, so that they're trying to average in at best price. And so these guys know, and for my sake here, I have 1, 2, and a 3% away from the moving VWAP line, and serves my purposes, pretty well in terms of what I'm trying to accomplish with it. And and if you notice here is that the this sell-off is more like a consolidation. It's not really selling off, and it's coming right back to the VWAP line. And this is the 18-day moving average, but that's an 18 on a 2 hour. But I use it as kind of a guide as well. And price been staying pretty close to that as well. And so what I'm watching now is to see if we get a touch of the VWAP and we break up over 230 to 231. Now, one thing that's not on this chart that I want to share with you is that I subscribe to services too, and one of them I subscribe to is I get access to all the pivots. And so there's a pivot out there called a yearly pivot, and the R2 of that yearly pivot is at around 231 in the SPY area. And so we have to respect the fact that these algos like to go to pivots. They like to go to R1, R2, S1, S2. And I have to use that as an option that, hey, we may just blow right through. We may blow right through and go to all-time highs before this thing's over. And I don't know if it's going to happen this next coming week or into the first week in January. I know what would surprise a lot of people would be if on the first week of January, instead of a big sell-off, they trap a lot of people short and take this thing right to the end. So I want people to keep that in mind. So what I'm using as my guide is that if I see price breaking out over this trend line, is that I'm going to get aggressive long for the week or two that it's probably going to blow through, because I'm sure there's a lot of shorts building up in here. And if we break down below the 219.85, 220 area, then I know this rally is sunk, and we're going to go into the correction that I'm expecting. And then I'm expecting it to fall all the way down into the 180 area. So I hope that made sense. And then, my second favorite thing I trade is XIV, and it's also been consolidating. But if you look on XIV on the daily, is it's still in a primary uptrend. And and this kind of fooled me. I backed off on XIV. It's my bread and butter trade. I backed off of it for a couple weeks because I just was expecting doom, and this just reinforced me. I have to really trust my charts, and it just, every time you get any kind of sell down, here was a consolidation, boom. Here we sold off for a day and it hung, and so I'm watching and waiting to see if we go up here. I left the position on. We bought back on Wednesday, and we traded around a little bit. On Thursday. We traded around a little bit on Friday, and I left a third of position on an XIV, just in the off chance that we continue higher on Tuesday. We still have low VIX. We still have a contango in the VIX, and so there's opportunity here for XIV to keep being accumulated here. And XIV is not so much an entity unto itself. It reacts to the people that manage this fund are reacting to the calculations that they have. And right now they're still selling volatility closer in and farther out at an acceptable angle that they have to keep shorting shorting the volatility to maintain this 30-day calculation that they have. So I'm not entirely convinced yet we're going to be dropping down into back into VWAP here in the next week. So I kept a credit spread on VXX call, and I kept an XIV position open. And so I just wanted to share those things with you. And then we're just going to have to wait and see when this yen relents and the markets realize that the multinational companies aren't going to be able to turn profit. I read this morning that they're literally thinking there's going to be a 20% increase in earnings from 2016 to 2017, and after 9 years of expansion in an environment where the Federal Reserve is raising interest rates and where China, Japan, and Europe are in deflationary modes right now because what the dollar is doing to them, and with oil down. I just don't know in what universe that math works. But that's what they put out there, and that's what's been pushing the market. And I just can't see how a Trump administration can react like that when people can't even agree that he won the election, and people are going to be just screaming at him every day of the week. So I think people are going to be sorely disappointed, and I think like the last 3 years, I think January and February are going to be pretty nasty. But in the meantime, we can get our heads handed to us if we're short. So anyway, hope you guys have a great Christmas, and I'll pump some stuff out on Monday, and looking at the week ahead, and we'll just take it day by day till the new year. Thank you. Bye-bye.